Welcome to Investors Insights. Our topic today is jobs, rates, and markets. Interesting times as we talked about here. In the month of December, interesting fact, for the past 20 years, just 5 Decembers have finished in negative territory. Now, there's no guarantee that we're going to see this. We're seeing stocks, they're rising in sync with improved earnings. We'll go with the word warm economy. Maybe great growth overseas. Everybody agree with me on that? Definitely. And then low inflation. But here at home, we've got some other interesting topics going on which tie into this, and we talked about this morning. So as we're coming to the close of a year, Bobby, you brought up some interesting facts, kind of looking backwards, I guess we should say, and asking the question, where does this take us? Talk about jobs for just a minute.
Last week we had a great jobs report come out. So there were 228,000 jobs created in November. That's a very strong number that almost guarantees the Fed will take action this week. And so with every report, we look at all the positives and negatives. The positives were that there's the lowest unemployment in 17 years. And that manufacturing was the industry that added the most jobs. We talked last week about NAFTA, the importance of NAFTA. So manufacturing is showing a lot of strength right now. But there was a negative, and that's wage growth. We are seeing no wage growth. Firms are saying they're not willing to pay for skills that people don't have. And so we need that trend in wage growth to really turn around and pick up.
Right. Of course, corporate earnings have been really good. So, that's caused the stock market and, to move forward here in an upward movement. At the same time, though, Ashley, you brought up if jobs are, out there, talk to us about looking forward as to what the data is saying.
Well, two great things that we saw in the report. One is every educational level post-high school enjoyed job growth in that job number. That has not happened in a long, long time.
Oh, okay.
A lot of times those lower skill groups get left out.
That's been
not
a big
this
complaint.
time.
Right.
Exactly. All the way from high school diploma to PhD. And that's a broadening of the base, which is great.
Right.
The second
and it also means people have money in their pocket, correct?
Absolutely.
And if they have money in their, exactly, that's the word.
Spend.
Yeah.
And then the NFIB data we saw was also great.
Talk about NFIB, National Federation of Independent Businesses.
Right.
Representing small businesses mostly.
Correct, which is where the growth is.
Right.
I mean, quantitatively, we know that, and it has been for many years.
Right.
They came out with their survey in November looking at hiring next year. Really, their confidence on hiring was the highest it's been ever in November. Wow. It sort of started that trend right after the election and has hit that highest mark, basically saying if you're a company of that size, are you going to hire next year? Yes.
Yeah, and that's a great boots on the ground research. If small businesses are hiring, that becomes a trend. Yeah. And then tying into that, because this week the Fed's meeting, Bobby's already talked about that. This is Janet Yellen's last meeting as Fed chair, and so got some history there going on. Yeah. But talk to us about that. What's taking place there?
So this everyone kind of expects, like Bobby said, the good jobs number pretty much cements that the Fed will raise rates for the third time this year in Janet Yellen's last meeting, which will be this week. And the market really isn't negatively responding to that. Right. Historically speaking, increasing rates, higher rates cause bond prices to come down. We've kind of had a Goldilocks bond market this year, not too hot, not too cold. The Fed has been able to raise rates on the short end where cash and where banks get overnight lending. But the long end has stayed flat. So most investors, most of their bonds are in that longer end. So the Fed has been able to raise rates and not negatively impact investors' portfolios. And so Janet Yellen will be kind of going off, probably talking that up, talking about how well she's done. And then we'll see early next year into March. But these positive job numbers give them some runway maybe to increase rates. But we haven't really seen that negatively impact investors, which has been great.
Right. Yeah, this market has been a strong market in terms of as interest rates occur and other economic news, it's continued to move forward because corporate earnings are going up, jobs are being created, and people are spending money. So that's kind of what we're looking at this point in time, as well as Bobby said, we're always looking at the positives, but also the negatives and the what ifs that could happen. So on that note, as we head towards the end of 2017, we're going to keep you updated. Continue to follow us on Facebook, Twitter, and LinkedIn. And just know that we appreciate the emails and the phone calls you send us to create this dialogue, make sure we're answering your questions and concerns. And then just keep having a great week, and as we work towards happy holidays. Thanks again.